Alrighty, good morning, traders. It's morning here anyway. I want to I'll be doing a market update for you today and giving you guys a bit of a look behind the curtain of what's really going on in the markets right now and what we can expect moving forward into the week. This is more like a week, looking at a week ahead and looking at what's going on right now in the markets as well. So, be looking at the stock market, be looking at silver and gold as well, and that's what we'll be focusing on today to help you get ready for the markets. And plus, we'll be talking about some other stuff as well too, leading towards the end of it, Q&A and all that down home country goodness. So, before I do start the session today, guys, I want to, as you're logging in, give me a hey, give me a yo, where you're from, where you calling, and I'll get back to you. Somewhere about that anyway. While I'm doing that, guys, let me bring up the typical disclaimer. Guys, do not place the trade based on what you're seeing in this session today, because trading is risky and it can cause substantial financial loss. There is no guarantees of making a profit in the market, especially if you're not following any sort of plan, okay? So this here is just to give you some education to help you become a much better trader. Also, if you haven't done so yet, make sure you, there we go. Make sure you head on down to johnsflashsale.com. I'm running the special offer again where you can get access to the Grab the Markets by the Ball training course for just $7. So go to johnsflashsale.com and you can get that. I'm running a bit of a special offer there. Bingo, bango. So what I want to do in today's session, guys, is I want to really have a look at what's really going on in the markets right now and what we can expect. Where are we? And all that sort of stuff as well too. And so that's what I want to be focusing on in today's session. So what I want to focus on first is that the history, or that the past movement of the markets. The past movement of the markets can give you some indication of where we are right now. So what I mean by that is, if you look at the S&P 500, okay, and if I bring up my trend lines here, you'll be able to see what I've got here. So I've got a couple of different screens here, and I'll explain the reason why I've got these, where I've got these, and so on and so forth. So this left here is just obviously a blank candlestick charts. A blank candlestick chart, and sometimes I'm also using this chart here as well too, just a blank chart. The reason why is because I'm trying to get a gauge of what's going on in the markets right now, as in like the highs, the lows, this up and down move. The market's always telling us a story. So we can go here, we can go to this level through here, and if I open up this chart right up and I squeeze this chart right up, you'll be able to see that, actually, you know what, let me go back to this chart here. I'm going to squeeze it right up. Actually, in fact, I'm going to bring it up to, say, a 2-day chart so you can see what I'm looking at here. This is a 2-day chart now. And one thing we can see, right, we can see how this level through here, in fact, let me go back to this level here, okay? So I'm going to squeeze that up. I'm going to bring up this chart here so we can get a much clearer view on what's going on here. So as we can see, right, if I open up my chart a little bit more, this is obviously the S&P 500. You can see my trend line that I've got drawn here, where we have a lot of almost touches through here. And in fact, there's probably more like that through there, if I'm being a bit more. But you can see how we have a lot of bounces through here, a lot of bounces. And now we're at that level there right now. And I'm not exactly sure if it's got to be that exact level, but we did indeed actually reject off this level here, which was resistance and a bit of support, and we had resistance up here. Now, the thing is, guys, is that the market is like a bit of an elastic band as well too, is that if the market rallies up very strongly and goes in a bit more of a vertical fashion, then we're going to expect some sort of a pullback. So by looking at that and going to where we are right now and seeing this very, very bearish candle in the markets, that tells us that we're getting ready. We're getting ready for more downside to come. Now, guys, we don't know whether this is going to be turning into, we don't know whether this is going to turn into some sort of a topping formation, or this is going to be the top in the markets. We don't know that, and we don't want to preempt that. We just we want to flow with the markets. If you go back to my #1 trading pattern in all crashes in history, you'll see what to look out for if we're about to see some significant selling. Okay, some significant selling in the markets, and we want to just focus on that. Don't try, and please try not to please try not to think that you're smarter than the markets. I don't know what's going to happen. You know, Ray Dalio doesn't. We don't know what's going to happen. But what we can do is we can focus on what's going on in the markets right now, and so we can see that there, right? So we have this Dow Jones through here, the S&P 500 right now, where we are right now, and the big bearish week. So I'm expecting some sort of a sell-off through here, depending on what actually happens here, guys. Now, remember, guys, if we start to make a lower low or even just a lower high breaking of previous lows, then that means we have sellers in control, okay? That means we have sellers in control, and that means that that we want to be we want to make sure that we are going with that, okay? So right now, if I open up my chart here and I bring up, say, the last 6 months, we definitely have buyers still in control of this market, okay? There's no doubt about that. Now you can never pick a top and you can never pick a bottom. But once again, guys, if you haven't done so yet, please go watch that video. Guys, give me a yes in the chat box if you've watched that video, the #1 pattern in all stock market crashes. And give me a yes in the chat box. And then also let me know if you actually really enjoyed that video, to give you guys a bit of a guidance on what to look for if we are going to see some serious downward movement. Because every time in history, every time in history, we have actually gotten that pattern, okay, and we have gotten that setup in the markets. So therefore, guys, I'm trying to give you guys a bit of a calming effect of, we don't need to rush into the markets. We don't need to try to preempt the markets. We just got to wait for the market to tell us what it wants to do, and then we're going to try and jump on the coattails. And that's what trading really is all about, right? And that's why I say within my trading, I have a trading setup, and then I have a confirmation candle. The confirmation candle is the market telling me we're now getting ready to have a night. We're now getting ready to move in this direction. Whether it's going to be just a small move, maybe just one candle, and that's all the trade's going to be, and that's sometimes that happens, or whether it's going to be a nice move and it's going to last for, you know, maybe a couple of dozen candles. And I'm saying candles is because depending on time frame, whether it's a 2-minute chart or a daily chart, it doesn't matter. That's what's happening through there. And so we need to just keep an alert and an alert on the markets, because if the market starts to get back into a situation where we were before, where we can see right here, right, we had this high, lower high, and a lower high. And then once we actually broke the low, that's when we started seeing some serious downward movement. So this may not turn into a serious downward movement. We may get just a drop back down, then a pause for a while, and then a continue rallying up. We don't know. So let's flow with the market. Let's not try to force the market here. Same with the Dow Jones, right? The Dow Jones has also been one to that. The Dow Jones has a lot of support level through here, at this level through here where we are right now. If I bring up my other trend line through here, right? So you can see there's a lot of action between what I'm trying to do, guys. I'm just trying to bring up. Isn't that interesting? Because there are valid trend lines that we can keep here. And I'm not looking to use valid trend lines to have a bias in the markets right now. I'm not looking to that. I'm just saying, okay, market, you tell me what's going on and I want to flow with you. Because the market's always right. The market's always giving us some guidance, right? So we had a bit of a double top here right now, and now breaking of the and now we're actually selling off through here. So it'd be really interesting to see if we do get that. If we go to the weekly chart, you can see this weekly trend line and why I've got that weekly trend line there through here. And now we have this support and support. And now that's what's happening right now in the Dow Jones. So if we have a look at, say, or we go back to there, we have a look at the NASDAQ now as well. Go back to the daily chart. You can see the NASDAQ is definitely at this level of resistance. I was mentioning last week, I was actually trading the intraday charts, the futures markets, the Forex and futures markets. And I saw the NASDAQ here. I'm just like, man, this thing's getting ready to sell off. And I so wanted to short it, but I didn't have a setup, so I couldn't short it. Now, guys, I'm talking about intraday base. I'm talking about like there's a 2-minute chart and 5-minute chart that they were setting up quite nicely for a trade for me. I had my setup, but I just didn't get my confirmation counter, so I couldn't trade it. But that's okay. That's okay. So that's what I'm seeing there right now. Let's go have a look at you. Some people said about the Russell and stuff like that as well too. So the Russell 3000 is pretty much doing what the other markets are doing. And the one thing that's not once again, guys, we've created this massive high up here. All right, so this may turn into a nice bull market through here. Now, one thing that is starting to create a bear movement is the transports. The really interesting is we actually did create what? We created a lower high through here, didn't we? So if we have a look at this movement through here on the transports, we had what? We had a higher low, then it ran up and it created what? This is a lower high. If we start to get a closing below 180, a lower high, breaking past previous lows, guys, if we get that, right now we have a bit of a double bottom formation right now, but we have a lower high. If we get a breaking past previous lows of the 180, who's in control, right? So we had buyers in control, the higher low. Now there's indecision, right? We still got a lower high, a bit of a double bottom. But if we start to break below 180, who's in control of the transports at least? Right? By flowing with the markets. Who's in control of the transports? Right? The sellers would be. Right? Sellers would be in control. Why? Because a lower high breaking past previous lows, that's sellers in control. Now, if that happens, then we have a lot of white space. The transports is probably going to go down to 155, maybe even down to the 160 level. And so that's what we're seeing there right now. So maybe even up to this 160 level. So that's where the transports. And interesting, if you look at the transports in the weekly charts have been what? Have already created a lower high. This could be some sort of significant lower high, and that's actually what it's doing right now. So in the weekly chart, we're already starting this overall big, massive bear movement in the markets, which is really, really interesting. And you can see here, right, like we had a higher lows all the way up through here, and then we went through a bit of an indecision, and now you can see we're starting to change trend. So if we get a nice close below that trend on there, yes, the transports is definitely weak, and the transports would definitely look like it's about to start to head down from there. And if we have a look at the Russell now, interesting. Look what the Russell's doing, right? The Russell's doing what? Let's go have a look at this weekly chart here for a minute. Right, so let's have a look here. Just having a look at this level. I haven't done much analysis on this one here. Nathan, are you looking at futures or equities? Right now I'm just looking at the equities, ETFs basically, not the actual futures platform. I trade the futures, which is I trade the Dow. The futures that I do trade is S&P, Dow, and Nasdaq. I trade those futures. Oil, silver, and gold, those sort of futures as well too. So it's actually really interesting to see what's actually going on here, because now we've had a high and now we've had a lower high breaking past previous lows. So that's actually a pretty weak sign. There is definitely some sort of support going on through here. So that's where it's probably going to try to get to. There's probably a lot of volume behind yesterday as well too. So yeah, so that's actually a lot of volume there with this one here. So Russell's definitely looking weak. Russell is definitely looking weak in the markets. So that's what's happening there right now, guys. With the Russell. So the Russell's doing that, and that may be telling us something. You can see here once again that we're getting a lower high breaking past previous lows. So that's actually could start to see that. So that's what I'm looking at there right now in the markets. But the main ones I want to start to see is I want to start to see the Dow Jones and the S&P start to do those things first. Alrighty, guys, if you haven't done so yet, make sure you grab your, I'm running a special offer right now to my trading course, the Grab the Markets by the Ball trading course, just for $7. Go to Johns, that's with an S, JOHNS, Flashow, johnsflashow.com, and you can get access to the $7 special offer that I'm doing right now. Now, back into the chat box that I've got here in YouTube, it says here, futures just open deeply green. Okay. I don't know what the futures are, but here's the thing, guys. Here's the thing. I agree with your analysis of the Russell. Nathan, as you can see, I'm just reading what the market's telling me. It's not about me being right or wrong, or it's the market is what the market is, and we're just flowing with the market. So the market's telling us right now what's going on, and then as that unfolds, if it changes and all that sort of stuff, then we need to change with it. Now, if we go to have a look at, so some people are saying that the futures gapped up, futures just opened deeply on the green. That's okay. That's okay. That doesn't mean anything, guys, because if you've been watching the market for quite some time, you'll know that just because the futures opened up strongly on the upside doesn't mean anything, right? It doesn't mean anything. It doesn't mean that it's not going to follow through, all that sort of stuff there. So, and as I was saying before, right, get ready for more selling this week. But the first thing we need to start seeing, right, is what do we need to see for more selling to come? Is it breaking past previous lows? So that's what we want to start to see, right? We're getting a bit of a bearish move. Oh, excuse me, a bearish move here on the Dow and the Nasdaq. We want to see a breaking past previous lows, and then we're probably likely to see a lot more selling in the markets. With the futures, guys, you got to be very, very careful, because what the futures look like during the night or during the day, my time, once the US market opens up, then the market could look completely different. Okay, so I'm not the one thing that I'm keeping an eye on for. So yeah, just remember that, guys. Okay, because there's been so many times, like if you look at the Brexit that happened in 2016, right? The futures were down 700 points. By the time the actual cash market opened and the cash market closed, we ended up like 200 points or something like that. So you don't ever want to assume because we got a nice gap up or a nice gap down or whatever, then that's going to be the case. Okay. So once again, S&P 500 and also the so if we gapped up, that's going to be okay. I do expect to see, especially in the S&P, I expect the S&P to have a lot more selling, just so we can get back into a bit more equilibrium in the markets as well too there. So please try not to focus too much on the futures. And if you trade the futures, which I do, and I trade that more in the afternoon my time, it's morning my time, but in the afternoon my time, that's what I trade those markets, and I trade those. But I used to think, oh well, futures are getting hammered overnight. So many times I'd see the futures getting hammered overnight, and then suddenly I'd wake up in the morning my time to look at the last hour of the US stock market, and then suddenly, bam, suddenly the markets would completely retrace all that downward movement. S&P down 50 points, and then suddenly you look at the market, and the market ended up 20 points. So that's what we're looking for there right now. But once again, guys, get ready for more selling this week. The main thing that you want to look out for is like this Dow Jones here, is that are we about to start to see a breaking of this previous low? Because we've got a double top formation here. Are we about to see a breaking of this previous low? And is the S&P, I believe the S&P is about to catch up to the Dow. So if the Dow starts to sell off a bit more strongly and we start to break this low, that's when we're going to start to see, all right? So remember, guys, what we need to see in the markets, please try not to think about what we think is going to happen. Right now, what the market is telling us. And if the market is going to see a serious downward movement, it'll create some sort of lower low, lower high, breaking off previous lows. Just like we go back to the Dow Jones, just like you can see here, right? We had a high, we had a lower high, we had a lower high, and then we had this breaking of previous lows. And then that's when we started seeing the strong sell-off come into play. So that's what's most likely going to happen in the markets. Now, again, no one definitely knows like what's going to happen in the markets and so on and so forth, but that's what you want to be focusing on and flowing with the markets. Okay, it's just what I'm doing here, guys. Is I'm just looking at the markets with a non-biased view and saying what's going on here. And now, due to the fact, guys, due to the fact that if I look at the weekly chart and I go to my S&P 500 here, I can see that we've been going up for a long time. So we're due for some sort of a pullback anyway. Okay, we're due for some sort of a pullback anyway, because that's how what? That's how the markets work. And so it's either a pullback or a sideways movement. So we still could get a 50% pullback on this S&P, and it's still being a big bull move. We just get a nice pullback. Everyone thinks that the crash is going to start, and then you watch the market will completely surprise you. The bull market will continue, and away we go. I'm not saying that's going to happen. I'm just saying that if we ever start to think about the markets in one side or the other, then that's going to be that's how the markets work. So, but I am expecting some sort of a pullback out of the markets here, and that's what this down candle here was showing that. So I'm expecting the market to at least get back down towards these low levels through here on the S&P. If that happens, guys, if that happens, then that's going to be a telling sign of whether we're going to start to see a nice downward trend and so on and so forth. So we flow with the markets. Flow, flow, flow. Flow, 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 like Greg Florimo. So yeah, you know, guys, and in that special offer that I'm running right now, the Grab the Markets by the Balls, that $7 sale at johnsflashsale.com. I talk a lot about reading the markets, and there's three awesome chart reading techniques in there. So let's actually look at now with silver and gold market, guys, because this is really interesting to see what's happening through here. So with the silver and gold market, if I look at what's happening through here on the silver and gold market, we can see there's a few different things that is happening right now, and you can see that the tune is changing with gold, right? Now the tune is that, what I mean by that is that if I bring up my, who loves Snagit? Bring up the Snagit tool. I love Snagit. If you look at the market as in like what I call the angle or the strength in the move, you'll see that something is shifting right now in silver. I'm sorry, gold. Why? Because look at this here. We had this move up from here to here. All right. So move up from here to here. So what was that? That was a nice vertical move, right? And then we had from basically from here to here, as you can see, right? Nice, big, strong vertical move. And then we had a move from here to here. Nice, big, strong vertical move. From here to here, nice, big, strong vertical move. But what are we getting through here? Notice how this point through here right now, the angle, the direction of this is so much slower. It's so much slower and it's so much weaker than all these other upward legs. That's what I call the strength in the move, because there's so much more in this one here. You can see how we have strong buyers, weak sellers, strong buyers, weak sellers. As you can see how the sellers didn't really last long, strong buyers. Now we're getting what? And if we have a look at the selling legs, you'll be able to see what I'm saying here, right? So in the past, what did we get? We got strong buyers, leg up. Now and then we got what? Weak sellers, right? Weak sellers doesn't mean like it didn't really sell off that strongly. We had a bit of a sideways movement, and then the market continued up. And then we had a sideways movement, very weak sideways movement, and then we continued up. And then we had a very weak sideways movement, and then we continued up. But now look at this here. Look how strong this selling movement is. The strength in that selling movement, is telling us that the psychology of gold right now is changing right now. We've got these strong buyers, weak sellers, to now strong sellers, weak buyers. Okay, so by looking at that, guys, it's telling us that there's a bit of a shift happening right now at this point, at this conjunction point in gold right now. And If we start to get a breaking below of this, if we start to close below and we start to get a breaking below here, then we're likely to see probably $1,200 gold from that. That's based on what the market's telling me, guys. It's not based on what we think or hope or anything like that. It's just based on what the market is telling me, because the market is always telling us, and the better you can read the chart, the better trader you'll be. And one thing I'm teaching you here, you guys here right now, is a technique called strength in moves. By looking at the psychology, not just one bar, but the collection of the bars, you can see the angle of the strength in that move starts to shift. And when that starts to shift, the market is telling us something's not quite right here, because we used to have a lot of stronger buyers in the markets. Now we're not. Now at this point in time, we have a lot more stronger sellers than we have. You know what I mean? And so that's how you read the markets. Okay. And so we just got to now we've got to now see whether this actually confirms into a bit of a lower high here. Because if we get a lower high, if we get some sort of lower high through here, and that's going to tell us that we're now getting ready for more downside to come, and when we're likely to see a sell-off in gold. So I know there's a lot of people out there right now that are still, after all this time, saying that we're going to get a vertical spike in cryptos, and we're going to get a vertical spike in gold. Guys, please don't listen to those people. They don't know what's going to happen. Okay. And especially trying to call a bottom right now in Bitcoin when we're doing when the market's just completely repeating itself. The last time we went sideways at 6,000 and then we actually dropped. The same people at 6,000 were saying the bottom. The same people say that there's a bottom in Bitcoin right now as well too. The purpose of me saying that, guys, is that no one knows what's going to happen, but we can start to use analysis like this to say, okay, who's more in control of this market right now? Are the sellers in control? Are the buyers in control? Is no one in control? And by using that, right, all we're doing here is trying to increase the probability of what's going on right now. And if we get certain things in the markets, that's because if we get a lower high now, breaking of previous lows, now we have sellers in the markets. But look what actually happened back here, right? We had a lower high, then we had a lower high, then we had what? A higher low breaking past what? Previous highs. Who's in control through here? The what? The buyers. Then we created a higher high and then a significant higher low. We had a little bit of a higher low through here, but that was a significant higher low. Higher low, higher low. But you can see, right? You can see here how the market started to change tunes, right? We had a high, breaking past previous lows, breaking past previous lows. Did not break past previous lows. In fact, it held it up to create a higher low and then break through. It was at this point right here that the overall tune changed for gold. And then the market came up, made a higher high, then a higher low. Then guess what? We broke past previous highs. And then we started to see that movement. So the market is always giving us some clues, right? The market has given us clues here that the market is likely to the market is always giving us some clues. Now, again, we never know exactly what's going to happen. But if we want some probability on our side, we wait for the market to tell us, oh, okay, we can never predict that this is going to be the exact bottom here. But what we can do is say, okay, look, we had a lower high and a higher low. The buyers are now raising their prices. We're breaking past previous highs. Oh, had a little run up, then it pulled back, and then we had a nice run up. And now we're getting this here, right? So now this could be some sort of lower high breaking past previous lows. And if we get that, then a major support level is down here at $1,200. And I don't care what anyone else says in the markets. There's a very high probability chance that that's what's going to happen if we get a lower high breaking past previous lows. Just like over here, guys. Just like here, how we needed to wait for the market to tell us it's going to turn. Now we need to wait here to tell whether the market's going to turn or not. And then when we do that, then we're just flowing with the markets. Flowing with the markets. So, and the same thing for silver as well too. Same sort of analysis. As in, like, we've got the strength in move, we've got a bit of a double top. We had this strong selling movement, weak buying movement. Like, this is the weird, very, very, very weak buying movement through here. So, and as you can see, right, like, look at this level through here. Like, look at that level through there. So that's actually completely broken past that level, and now we're rejecting it quite a lot of times. So, guys, what I'm saying here is this, okay, is that I don't know whether we are going to create a lower high here or not. We need to let the market tell us what's going on, and then we can go with that. Because we may not. We may actually hold here and then start to rally back out again, and then continue rallying up to a newer high. So it doesn't mean that this is definitely going to happen, as in like this lower high here. It's definitely going to happen because we may not get the lower high breaking past previous lows. But if we do hold here and we start to rally out of this strongly, then the bulls are going to come back into the markets. And then now, and again, this is all about being a successful trader, especially viewing the markets, is all about just analyzing what's going on right now in the markets here. So let me go through some questions now, guys. Let me go through some questions. If you haven't done so yet, guys, go to johnsflashsale.com to grab the $7 trading course. I'm running the special offer again. So go to johnsflashsale.com to grab the $7 trading course. Grab the markets by the balls. Grab them by the balls. So let's go through some questions now, guys. Let me put this down here. And let me go through some questions for you. Just give me 30 seconds, guys. I'll be back in a minute. Alrighty, traders, I'm back now. Let's go. I'm going to go through the chat box now, guys, and then answer some questions for you. So let me go back through the top. Investigation into Trump went well. Think the market might rally off this news. It may do. It may do. It doesn't mean it's definitely going to or not. Sometimes things can be the opposite in the markets. You know, like if you go check it, for example, if you go check all major wars that happen, all major wars actually cause a bottom in the markets. If you think about it, the government shutdown actually created a bit of a floor in the markets. And then the market started rallying after that. So it was really interesting. The stock market is going to crash on the 1st of April. Really, James? James, now it will never recover and the Dow will never close above 26,000 again. Oh, really? All the stock markets will reach zero within the next 2 years. Okay, let's actually time out here for a minute. Time out here for markets. Time out here for a minute, okay? The markets will never hit zero. Like there's not gonna, the whole thing's not gonna completely collapse, and there's gonna be no market at all, right? That's just not going to happen. Okay, because put it this way, if that does happen, we have a lot of problems on our hands. But the thing is, it's not going to get to that point, okay? So don't ever think that. The next thing I want to say is that the 1st of April, James, you do realize that a crash or a recession takes 12 months to happen. It doesn't take one day. You realize that, right? So it's never, you know, if you're talking about a crash, right? The 2008 stock market crash was what? 2008. It took a whole 12 months for that to thing. Now, yes, we did have a couple of months of strong downward movement. Yes, we did get that. That was more towards September, October. But the 1st of April, I don't see, there's nothing that's telling me that. So unless you know something more than we do, James, my guess is that if you are so confident, right, you have sold every single thing that you own. You're living in a 1-bedroom shack right now because you've put all your money and all your friends' money and every single other person's money into shorting the stock market right now, buying weekly options because you know that that's definitely going to happen. Is that what you've done, James? Please let me know about that. More selling in BA. BA. Oh, geez, my stomach is rumbling. More selling in BA. Yeah, I think BA has actually reached some sort of a top here. I really do. I really do believe there's that. Now, only reason why is because if I look at the overall markets through here, that this overall long-term weekly chart has had a big move up sideways. We had a big push up, and now it's actually selling off. So I believe I believe we've actually reached a bit of a final top on BA. That's my belief, guys. And then from that we can I just see that we're likely to start seeing a lot more stronger selling out of BA, especially what's been happening with it right now. So I do see a lot more selling to come into BA. I highly doubt that, James. Oh, Nathan, yeah. No, it's not going to go zero. It's not going to go to zero. There will always be a market, and if you know, and that's where, guys, if you know, like, and put it this way, guys, put it this way. Yeah, that's just ludicrous. The market's not going to go to zero. It's not going to happen. Hey, let's go. Ready to learn. Cool. I don't, Nathan. I don't, Nathan. Oh, so Michael. Okay, so Michael thinks also that this whole thing's going to collapse. Everything's going to go to zero this year, and there's not going to be any market after this. Really? That's never going to happen. That's never, ever, ever, ever. The market would. Yes, we may get a stock market crash, but remember, guys, there's just as many buyers in this market as there are sellers. Right now, sometimes there's a lot more selling than the buyers, and that's what causes the market to come down. But no, the market's not going to do that, guys. Please, that's just ludicrous. We will hit zero in 08. We would have hit zero in 08 if they didn't print. Nah, Michael, that's just crazy, Michael. That's crazy talk, man. Seriously, think about what you're saying there. That the whole stock market's going to go to zero. No. Now we might go through a very big pullback. Call it a crash or recession or that, but that's not going to happen. No. Futures in 5 minutes. Cool. Great info, John. Keep up the good work. Fantastic. Alex, non-for-profit. Fantastic. No. Oh, you did. Yep. Cool. Nathan, Michael, and they will do it again. Never underestimate an institution which has been in power and has stranglehold on the monetary system for 100 years. Yeah, you know what, Nathan? You can talk about all that sort of stuff, but seriously, man, how is any of that sort of information going to help you move forward in the markets? How is any of that information going to help you get ahead in the markets? It's not, right? It's totally useless. Be careful where you spend your time with or spend your time on, because if you're like one of my mates, he loves watching a particular person in the markets. I'm not going to mention his name, but it's always negative. It's like, forget the negative stuff, right? Because there's so much positive in these markets, right? So the thing is, you want to be careful what you're listening to, guys, because it's not, if you are not listening and doing something that's helping you get better at understanding these markets, then please, futures provide the past. Gaps tend to define pushes. Johnny, look in the futures. Oh, okay, cool. Let me have a look at, I'll go to I'll go to, let's have a look at, okay. Futures. Well, the futures are only up 3 points, guys. Like I'm expecting, I'm bringing up investing.com right now, guys, to see what's going on right now with the overall markets. Because I haven't actually opened up my futures. Let me actually go to here. I haven't got my futures and forex platform open up right now. So let me have a look at what's going on here. Oh, are you guys serious? It opened up like 3 points. Come on now, guys. I was expecting something like a 20-point gap up. You guys are talking about like you guys are talking, the way you guys are talking was like a massively gapped open. This is like, yeah, gapped open 3 points. Yippee doo day. You guys crack me up. Oh, it gapped up. More selling to come, guys. More selling to come. You guys are funny. I was expecting something like, oh, yeah, maybe the market gap, it gapped up like 20 points or something like that. And I'm looking at the future. I'm like, oh, there's nothing. There's nothing there. It's like a little gap. Ah, you guys are funny. You guys make me laugh. Forget that, guys. I agree with your analysis, Russell. Fantastic. Futures gapped up because of the Mueller report. Who cares about that? Like it's 3 points. It doesn't matter. Could reverse Tuesday. Tomorrow, just because the market's gapped up 3 points today, 3 points, it doesn't mean it's going to stay that way. We could end up for another red day. In fact, there's a very high probability we're going to end up with another red day today. In one of your last videos, you mentioned look out for higher lows and lower lows and vice versa. It is fair to say that when we saw Friday is a higher low, I'm speaking on the S&P specifically. Huh? In one of your last videos, you mentioned looking for a higher low. Yeah, higher low. So if you're looking at the S&P 500, right, we had this here is a higher low, and we've just had a run up, and now we've actually had a pullback. So until this low here gets broken, nothing has changed. Nothing has changed. John, what do you think about having positions long or short and trading around the positions by maintaining the same financial position and allowing the numbers of the shares? I'm just waiting for a crash to happen. Just some guy was doing the burnout in the wet. So anyway, by allowing the numbers of the shares to fluctuate price alone. No, Don, no. I don't agree with that. John, what do you think about having positions, long or short, and trading around the positions by maintaining the same financial position? No, Don, no. What I think, what I know you should do is that if you're trading these markets, this is not investing. Even if you are investing, use the same sort of thing, right? But if you are trading these markets, then you should wait for a particular setup that you like, and then you only trade that setup every single time. So, for example, if I showed you every single trade that I've taken this year, whether it was a 2-minute forex chart or an hourly futures chart or a daily stock chart, you'll see that they all look very, very, very similar to them. They all have the same trading rules around them. Because if you want consistent results, you've got to be consistent at trading the same thing long term. So let's have a look here. Looks like they're trying for it. Looks like they're trying for a bounce. 3 points, guys. 3 points. three points. I was expecting like a 40-point gap or 20-point or something like that. Don't worry about that. Silver weaker than gold, but on verge of breakdown. Looks like it, yeah. Um, Gold getting close to inflection point. Hey, John, I love the way you read the charts without all this bullshit indicators. No problem. Although the thing is that when reading the markets, it all comes back down to, because remember, every indicator out there is derived from what? The price. So if we can start reading the price better, the chart, that's the reason why I don't have a lot of indicators on there. It's just like, it's useless. That's not the thing that's telling you what's going on. Oh, but John, you don't understand. The better you can read the chart, the better trader you'll be. Meaning, like, is it too overextended? Who's in control? Strength and moves, all those different things that I talk about in my videos. Do you find gold and silver move in tandem? Sometimes. I just trade them individually, though. No vertical spike unless something serious happens in the markets. We're not going to get, okay, we are not going to get a vertical spike, guys. We are not going to get a vertical spike. People have been saying we're going to get a big vertical spike in silver and gold and the cryptos. And one particular person has been saying that for a long time. We don't want to be thinking about that, guys, okay? We may get some nice movement, but the market's not going to one day wake up and suddenly it's going to be 20% down, okay? Because think about this, guys. If we do start to get some strong selling in the markets, 7% and the markets are down, circuit breakers kick in and stop the market from selling. You realize that, right? So the market completely shuts off. So we will never, ever again have a 20% down day. Now, they shut it off for half an hour at 7% down. Now, the thing is that's talking about the Dow and S&P. Like, that's not talking about like the individual shares. Individual shares, we can have that. But the Dow and stuff like that, when the Dow and the S&P are down 7%, circuit breakers kick in, and then they come back on half an hour later. And then after half an hour of that happening, if we start to get a lot more selling, then they close it down for, I think double time, maybe for an hour. And then they open it up again. And if there's any more strong selling, then they close it down for the entire day. And sometimes for a couple of days, they just stop the market just to wait for it to calm down. I really learned that through 2008, trading the S&P 500, the E-mini S&P 500. That was my sort of my baby in a sense, because I traded that very heavily. And yeah, I remember I was in one trading the E-minis in 2008. It was actually during the September and October, those things when the whole Lehman Brothers started to happen and banks started, coming out of the works of what's really going on. And I remember I was short the market, and this thing was going and going and going and going, and suddenly the market stopped. And I thought, what happened? Did the data stop? Did it? What's going on? And I'm like, what is the market? What's going on? And suddenly I thought my internet was down. I'm just like, crap, I'm in a position right now. And then I'm searching. I'm just like, what's going on? And then I'm looking at my platform, and then nothing's working there. But then I'm looking at my other websites. I'm like, okay, then my internet's still working. What's going on? Maybe it's a platform. And oh man, I was freaking out for like half an hour. I was like, what's going on? What's going on? And then I remember calling the broker saying, listen, I want you to, I don't know what's happening, but the markets, but something's happening on my internet. I want you to flatten my position. And that's when he said that there's been a circuit breaker hit to the markets because the market was selling off so strongly, so quickly, that the circuit breakers came in and stopped it. And that's what's happening right now. So he said, give it 20 minutes at that time, whatever it was. And then the markets will continue. Thanks, John. I'm learning to respect the market with your videos. Well, we're not smarter than the markets. We think we are, but we're not smarter than the markets. That's why I say you either respect the market or the market's going to take every single cent you have. And what I mean by respect the market is wait for some sort of confirmation that something is likely to happen, not just get into something because it looks good or that's yeah. Do you use any specific indicators to assist in a trading strategy? No, Nathan, no. Oh, actually, yeah, I do. This is how I trade the markets. That's how I trade the markets, because literally 95%, you know what? I'd have to say close to 100%. Close to 100% of my trading setup comes from, and when I'm trading the futures, I don't really even need indicators. When I'm trading the futures in the Forex market, I do use one moving average or a couple of moving averages, but 99% of my trading system just comes from basically this here, the chart itself. Because that's the most important thing to anything. It's not, I didn't use any indicators. And the funny thing is, guys, is that how I used to trade was like this. This is how I used to trade. Crazy, right? I had an RSI there too for a bit. Look at the moon. Oh, I had about a 60% and then I had about a 60, maybe 70% win loss ratio by using this. So yeah, this is a double stochastic here. I'll get into that bit later on, how I came across that. But guess what, guys? Once I started removing everything and I started focusing more on the charts, now I trade like this, but I wait for a really good chart setup. Now my success rate is 90+%, 90 plus. I don't trade a lot though. The interesting thing is that when I was trading like this, I was having quite a few trades and a lower win-loss ratio, 65, 70% win-loss ratio. So a lot of trades. When I trade like this, fewer trades, but much more higher win-loss ratio. But that's the same that I apply for all the markets out there. So it's the same that I apply for all the markets out there. The market is a news-driven market, though, John. No, it's not. No, it's not. Because the news is what happened yesterday. It's not what's gonna. It doesn't mean because something happened yesterday, it's going to affect the market tomorrow. Right? It doesn't mean that, everything looked good with Donald Trump, so we're going to have a bullish day today. Because a lot of the times in the markets, what you will find is a lot of things are opposite to the markets. So, for example, you would think wars, right? I was saying this before. You would think wars. Oh, paleo. I just saw what you said there, paleo. And maybe it's but Nathan, no. Again, like a lot of things mean opposite, right? Like, for example, you do realize that it was at the bottom of this downward move when the government actually had the shutdown. When the government had the shutdown, it was at the bottom of this market selling off. Then the market took off. But hang on a minute. You would think government shutdown, ooh, that's bad. And then the market was bullish after the market shut down. So you can never say something is going to do this because of the market and so on and so forth. So it's not a news driven market out there. It's all about reading the markets. For me to believe a crash, weekly S&P charts to follow. Attention, I'd like to see a lower high and lower lows on daily. Oh, yes, of course. Paleo? Yes. Paleo. Paleo? I think I forgot. Apologize for not pronouncing your name there properly. But yeah, that's what you want to see, right? Because if that's happening, then guess what? The market's telling us we're sellers are in control right now, and we're likely to see more downside. But in the same thing, and this is one thing that people just don't understand about the market. Just because that's what's happening right now, doesn't mean within a few days that whole thing can completely change to no one in control or buyers in control. Right? Because it's never about, yeah. Are you on TradingView, John? No, Nathan, no. I don't use TradingView. I use TC2000, and then I use my broking platform to get in there. Look at the move in the US 30-year bonds. Yeah, I know that there's a lot of things happening, guys, outside of like the bond markets and all that sort of stuff. Please don't be in the mind frame of just because another market is doing something that's going to mean something for the stock market. So therefore, you're going to place a trade on the stock market because another external market is doing something. because that's just the wrong thing to do. You want to trade them. You want to trade the market that you look at based on what the market you're looking at is doing. Flight to perceive safety. Well, I'm not seeing that right now, Nathan. I'm not seeing that right now. In fact, we're actually getting a lot more bearish tone right now in silver and gold than, when you're talking about the safety havens. Who's the one person saying that for a long time? Yeah, that person. He's on T. You think with all the Mueller report, the market will reverse, or that doesn't matter? It doesn't matter. It really doesn't. The Mueller report, it doesn't matter. Oh, look, the Mueller report made the market gap up 3 points. It's probably closed by now. The gap's probably closed now. So, yeah, it doesn't matter, guys. What matters is what the market is telling you, the charts. None of that crap. I applied for the flash sale again. Please check. The CC payment is on my banking records. Malcolm, if you have not gotten access to that, please email me and I will help you out. Don't be putting the chat box here right now because I'm going to completely forget it in 3 minutes from now, okay? Please email me. All right, please email me. SPX have a higher high? Yes, it does. It has a higher high, yes. If the S&P heads lower, doesn't that a very large head and shoulder patterns? Maybe, Don, maybe, yes. Maybe. But just because a very large, a head and shoulder pattern is not necessarily a reversal pattern in the markets. You do realize that, right? There's so many times in the markets where we've had head and shoulder formations and it's done completely the opposite. All right, let me show you what I mean here. All right, so if I bring up, say, Netflix here for a minute. Look at Netflix. Right? If I go to Netflix weekly chart, you'll be able to see what I'm talking about here. Look at Netflix, right? We had what? We had shoulder, head. We had a big shoulder. Look at that. The market broke. We actually did get a little bit of selling off, didn't it? But look at what happened there. Bam, came right back up again. Another one is McDonald's. Another one. It's so off the top of my head anyway. McDonald's. Weekly chart. Right, what do we have here? Let's use this one here instead. Shoulder, head, potential right shoulder. Doesn't mean it's going to be a bearish, doesn't mean it's going to be a reversal pattern. A lot of these patterns here doesn't mean it's going to be the top in the market and we're going to go down. Yeah. John, my first trade on the setup is up 50% already. What setup are you talking about there, Gregory? I'm not sure what setup you're talking about. I find that the market moves, then the media tries to assign a reason. Yeah, that's all it is. That's what the news does. Help, Malcolm. You said what email? Help@mastertraderlab.com. Help@mastertraderlab.com. John, my first trade on the setup is up 50% already. I'm not sure what I'm not sure what you mean by my setup. I'm not in any trades right now, Greg. I'm out of all my trades. I even put that on the private Facebook group to all the members to let you know what I got out and so on and so forth. So I'm not sure. I'm on your product page. Is this marketing hype? Well, Nathan, don't. Video number 2, 10K per month plan. Well, what that does, it shows you the steps to progression to get to 10K per month, where you need to start and what you need to do to actually eventually get to that point. But you know what, Nathan? The trading course is not right for you. So I don't want you as a customer. So please don't buy it. I don't want you as a customer. I don't want you to be using the $7, which is probably going to give you so much more information than any other thing out there on the planet. So please, I don't want you as a customer. Okay. Okay, Malcolm. I'll get to it later. So there we go, guys. The thing is this, guys, okay? The thing is that you want to be flowing with the market, you want to be focusing with the markets and focusing on what's going on right now in the markets, and not be getting in based on a news media or a report or anything like that that's going to stop you from moving forward. So anyway, guys, that's it for me today. If you haven't done so yet, guys, apart from Nathan, I don't want your $7, my man. Actually, by the time I get it, it's like $4 or something. But anyway, go to Flash, go get the $7 trading course right now. And I will catch you guys next time.